This is a typical example of a question on asset disposals. So before I start looking at the PowerPoint presentation, just to give you a sense of the type of thing to expect in such a question. So we've got a company, Capital Delivery Services, owns a fleet of trucks, and at the 1st of January 2019, these were the trucks that it owned. So it's got 3 trucks owned, one bought back in July 2015, one bought in April 2016, and one bought in October 2018 at various costs each time. The middle paragraph is usually a significant one and relates to the depreciation method and policy of the company. So the depreciation policy of the company in respect of the trucks is to charge 20% per annum using the straight line method from the month of acquisition. A full month's depreciation is charged in the month of acquisition and none in the month of disposal. Okay, so that's quite a significant statement. That tells us how assets are depreciated when they are acquired. So when we buy an asset, we charge a full month's depreciation in that month. Okay, so it doesn't matter whether the date of purchase was the 1st of July or the 20th of July, you charge entirely the month of July. And you don't charge at all when you sell an asset. So if you sell it again in the start of the month or at the end of the month, it's immaterial. You don't charge depreciation for that particular month. Okay, so during the year ended December 2019, the following transactions arose on the vehicle account. So in August 2019, vehicle 1 was sold. So we have a disposal of an asset and we sold it for some money. We got €500 scrap proceeds. And in November 2019, vehicle 2 was damaged and traded in. So again, another disposal, but we bought a new vehicle. So there was a new vehicle bought, cost the new truck was $60,000. So we've both a disposal and an acquisition in this particular transaction. And you're asked to show how the above transactions would be reflected in the following nominal ledger accounts: the cost account, the aggregate depreciation account. Okay, there's that term, aggregate depreciation, disposal account, and depreciation expense account. So that's the current year's depreciation value. So we have some calculations to do, and just to relate it back to the demonstration that I had earlier, we've got vehicles owned at the start of the year, which is the equivalent of these ones in the demonstration, and then we have vehicles being bought and sold during the year. So we have some items being sold and we have some items being bought, and we're basically required to show how all these transactions are reflected in the financial statements, specifically these 4 ledger accounts. So what I'm now going to do in the next video is demonstrate the accounting processes, the debits and the credits that we need to be able to deal with when attempting such questions.